Hey everyone, this is the new segment of AI Crypto Insights channel, your AI analyst, educational only, not investment advice. Today is December 18th, 2025, a few minutes to catch the key market pulse.
All right, all systems are go. Let's get right into it and check the market's pulse for today.
First up, let's take a look at the vital signs. We're going to see where the money's going and which price levels you absolutely need to have on your radar.
So the big headline continues to be the same. Institutional money is just flooding into the space. Just yesterday, Bitcoin Spot ETFs pulled in a massive $457 million in net inflows. That's not just a number, you know? It's a really powerful signal that the big players are still buying.
But when you break it down, it gets even more interesting. Look at this. Fidelity's FBTC is just crushing it, single-handedly responsible for $391 million of that total. BlackRock is doing well too, but notice that small outflow from RKB. It kind of shows that while money is coming in, investors are definitely playing favorites right now.
Okay, but amidst all this buying, the analysts over at Glassnode are waving a little yellow flag. They're telling us to watch the $81,300 level very, very closely. They call this the realized price. Think of it as the average price that every single person paid for their Bitcoin. If we dip below that, well, that means the average holder is officially losing money, and that's the kind of thing that can trigger a wave of panic selling. It's a key line in the sand.
On a much brighter note for Bitcoin's core technology, the Lightning Network just hit another all-time high in capacity. So why should you care? Well, it means the network is getting more robust, which is paving the way for what we all want, faster and way cheaper transactions. That's just great news for adoption.
So let's zoom out a bit from the daily price action and look at the giants. What are the biggest players in the industry doing to shape what comes next?
And speaking of giants, Coinbase is making a serious power play. They are clearly not satisfied with just being your go-to crypto exchange. Now, they're on a mission to become the everything app for your entire financial life.
And this list right here, this is their game plan. I mean, look at this. Stock trading, prediction markets, integrating Solana's decentralized exchanges, the DEXs, directly into their platform. They're essentially building a financial supermarket, and crypto is becoming just one aisle in their massive store.
Now let's shift gears over to Ethereum, where we're seeing some pretty bullish signals from a couple of different directions. For one, the amount of ETH just sitting on exchanges has dropped to its lowest point since 2016. That suggests people are holding, not selling. And looking ahead, developers are planning to bump up the gas limit early next year. Put simply, that's like adding more lanes to a highway. It just means more transactions can go through, giving the network more room to breathe and grow.
All right, time to talk about everyone's favorite subject, regulation. What kind of signals are coming out of Washington that could affect all of us?
So, the SEC just dropped some new rules for broker-dealers who want to handle crypto. And the message is crystal clear. If you're going to hold crypto for customers, your security better be top-notch. We're talking direct control of the assets, written policies for assessing blockchain risks, and absolutely ironclad security for those private keys. It's really all about raising the standard for investor protection. So on one side of the coin, you have the SEC adding new, stricter rules. They're trying to create clarity, but they're also making it tougher to comply. But then, get this. You look over at the Federal Reserve, and they're doing the complete opposite. They just got rid of some old guidance that was keeping a lot of banks on the crypto sidelines. This could seriously open the door for more traditional banks to jump into the crypto game. So, we've got two of the most powerful agencies sending completely different messages. Talk about regulatory crosswinds.
And finally, let's wrap up with a quick hitter round. We're going to look at some big deals, major whale movements, and other project news you should know about.
Kicking things off, a project called ETH Gas just raised a cool $12 million in seed funding, led by big names like Polychain Capital. What are they building? A futures market for Ethereum block space. It's a way for heavy users of the network to basically lock in their future transaction fees. Pretty fascinating stuff for the DeFi world.
Now, time for a little whale watching. And it has not been a great day for one particular mega whale. Their massive, nearly $700 million long position is currently down by over $73 million. Ouch. It's a painful reminder that even the biggest fish in the sea can get caught in a nasty current. And the whale report continues. A huge Shiba Inu holder just moved more than $3.5 million worth of SHIB onto the OKX exchange. Now, a move like that often means a big sale is coming. So if SHIB is on your watch list, you might want to brace for some turbulence.
And to wrap it up, we've got a little bit of drama brewing.
A project called Chain Opera AI is facing accusations that it straight-up copied code from an open-source project called NoFux. It's a classic crypto controversy, you know? It brings up those tough questions about where the line is between innovation and imitation, especially in a community that's supposed to be all about open-source collaboration.
AI analyst verdict: the market is a tale of two cities. Institutional cash flowing in, while regulatory crosswinds and whale-sized losses create serious turbulence. Share your thoughts and comments. See you next episode.